What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over Apple. We're going to talk about its overview. We're going to talk about its financial performance. And finally, we're going to talk about where we can expect the stock to head in the next quarter. So first things first, let's go ahead and pull up Apple's overview on tradingview.com. And the first thing we're going to look at is Apple's price to earnings ratio. The price to earnings ratio is always the first number we look at when we're analyzing the stock because it gives us an idea of how cheap or expensive the stock is in comparison to its sector. You can see here that Apple's price to earnings ratio is currently at 26, which is higher than the average 15 to 25 range that most investors look at. Whenever you're investing in a stock, you want to find companies that are undervalued and trading between 15 and 25. The closer they're trading to 15 or below 15, the more attractive that company's valuation is at that current price. You can see that Apple is on the higher end of that 15 to 25 mark. In fact, it's trading above that level. However, when we're comparing Apple to the rest of the technology sector in the United States, you can see that on the American stock market, the price to earnings ratio of technology stocks is currently at an average of 45, which means that Apple is actually trading significantly far below the rest of its competitors. This doesn't mean that Apple is not ready for a further correction. However, it is something to keep in mind when you're evaluating the entire technology sector. Now, obviously, with that being said, it could be stated the technology sector is due for a strong pullback. A correction is definitely due across technology stocks because many of them are trading at inflated valuations, but we don't necessarily know when that correction is going to happen. But we do know that the market has been especially bearish on Apple, and it definitely has a good reason to be. When we go into Apple's statements and income statements, we can see that almost throughout the entire 2023 year, Apple's sales and revenue have been declining year over year. And for the company to be considered to be the most valuable company in the world, yet to have 4 quarters of straight sales declining, that is already painting a bad picture, and it could spell trouble for Apple's future, given the fact that iPhone sales are especially slowing. Now, Apple has done a good job of growing their net income even through their sales declining, and that's due to their service sales. However, nonetheless, declining revenue is not something that investors like to see, so Apple is going to need to post a turnaround story in quarter 2 of 2024 in order for them to have a bullish rest of the year. Now, when we're analyzing Apple as a whole, we do see that it has significant revenue generation nonetheless. So even though revenue has declined, which is normal for any company during a recession or during a slowdown period, the company is still bringing in nearly $500 million in revenue, and they're still profiting nearly $100 billion a year, which is not something that we could sleep on or discount. The company's balance sheet is also at a very healthy ratio of 352 to 290 in assets to liabilities. And finally, what's really considerable is that Apple has $106 billion in free cash flow, which means they are likely able to withstand any dark time. They can buy out competitors, they can spend a lot of money on research and development, and they will likely maintain their spot as the top position. Now, some things that are hurting Apple, of course, are going to be the Apple Vision Pro. It looks like many people are starting to return that headset. We saw from which is Unity Software, which is in direct partnership with Apple to produce the Apple Vision Pro. Their last quarter spelled trouble, which already foreshadows that the Apple Vision Pro is not selling as much as Apple expected. Now, of course, this has affected Apple stock significantly. While the rest of the market rallied, Apple stock has been on the decline, which makes us believe that if technology stocks and the rest of the market corrects anytime soon, Apple is going to be one of the quickest decliners to the downside. And so if you are an Apple investor and you're wondering if Apple has more downside room, we can see Apple's price to earnings ratio potentially falling below 20, which would bring the stock closer to 160. And so if you are looking at Apple long term and you're wondering where the next stop may be, we're looking at between 155 to 160 on the next leg down. Now, this doesn't mean that we are turning fully bearish on Apple. It just means that we are expecting a little bit more of a correction on the stock before it continues its rally higher when sales bounce back and profitability continues to go up. So if you are looking at Apple and you're wondering what signs to look for in terms of a reversal, right now Apple is trading below all of the healthy moving averages that institutional investors use on their chart. especially the 50, which is this yellow line, the 100, and the 200-day moving averages. Wall Street and institutional investors use these lines to gauge whether a stock is currently in a bullish or a bearish trend. And you can see that as soon as Apple dipped below the 50-day moving average, which is the yellow line, it retested it and it sold off significantly because it failed to break out. And so if you are on Apple's daily, whatever date you're watching this on, you always want to have the 50, 100, and 200-day moving averages active. When Apple climbs its way back above these lines, that's when buyers may restore that confidence and continue that push higher. But as long as it is trading below those lines, bears are definitely in more control and the Apple stock has more downside room to move. If you are looking for other signs that the stock may be reversing, you can also add the 10 and 20-day moving averages on your chart. And if the stock begins to climb back above those lines, then it may be due for a reversal, but buyers won't get fully comfortable again until the stock is back above its 50-day moving average. And this is the simple day moving average if you are wondering. So I hope you guys found this video helpful. Don't forget to subscribe and like.